so here we are at the 200. You know, in a sense, it's not too different than the Bitcoin setup, right? Where it had to break through a level along the point of control in the center, and then, you know, make its way towards the 200. Well, now it's here. The chart is still bullish. Right? One of the things that I believe, like, the script helps me with is my bias. Right? Like, we all have a point of view on something or other. At the end of the day, the market said to go long here. And so far, that's been the right trade. How long will the long trade stay valid? Until the chart tells us it's not valid anymore. Right now, price looks like it still wants to move higher. The stochastic RSI is, you know, running about 90, give or take. So that tells us the buyers are still in the room, right? Buyers haven't left the building. Might be taking a break, but they haven't left. The moving average and signal line on the MACD have broken zero, that kind of halfway level, and now more bullish things are inclined to happen than bearish when the moving average and signal line are north of the zero. Your resistance, so in order to figure out where price is going to go on the right side of the chart, we need to have a good look at where it's been. Right. So you can see what it's going to have to break through here, right? There's a lot of resistance here. A lot. I shouldn't say a lot. It doesn't feel like a lot, but that's the level. Somewhere up in here. So if you get north of the 200, then you're going to challenge probably this neckline area or the upper value range for the point of control. But it's a noisy chart, right, because of the volatility. So let's look at, there we go, let's look at the weekly. A little cleaner to look at the longer time frames because we're taking some of that noise out. Real clean sell signal at the top on the weekly. Broke through the 20. Had a coffee at the 50. Didn't quite make the 200. But kicked up and is now challenging the 20-day and the 50-day moving averages. So is this the first test of the 20 and the 50? Yeah. Right. There's our failure of the 20, there's our failure of the 50. Testing the 50. Now it looks like we want to maybe try to test the 20, but what's the takeaway? The takeaway is that's the first touch of both of those. First touches typically will find that resistance in this case, and or they will fail. The only thing that's going to drive it further is a ton of money, right? It's the money that moves the market. So we have three choices: up, down, and sideways. Sideways is going to be obvious, but if we go up and we break through this level, then you're automatically going to start looking at those highs as targets. What's concerning a little bit is that the volume profile on the weekly shows all of this as a premium. This is the upper value range. So everything that we just talked about is going to take place in the area of a premium. So the question will become, does the market feel comfortable enough knowing that it's at a premium to challenge those highs? We're probably going to find out, right? So if we fail these levels, well then, this could be, King, one of those situations where we do that roll. You actually don't change trend, and then you hit resistance and then you fall. So if that was to happen, the upper value range would be a target for sure. And if you fail that level, because we haven't tested the 200 weekly yet, and this really bothers me, right? So I keep waiting for the setup that might lead to that, because at some point in time you're going to come back and tag it, and you're more likely to tag it in volatile conditions like this than not. So I guess what I mean by that is, if you do come back and tag it, you don't necessarily have to stay there for any length of time, but although it's possible, but I would expect the tag to happen out of volatility. The body of this weekly candle, I'd like to see it a little heavier if it really wants to challenge that range. So that's kind of where I see NQ going, but if you're looking at a shorter time frame, so this is why I like the volume profile, right? Because look what it does to price. Like, one of the things that we talk about is tracking and then trapping price. The volume profile is one of those tools that allows you to trap it in a range, which I find helpful. It's starting to look like a staircase up, isn't it? It's possible. So on the 1 hour. But nevertheless, you have a range now. You have an understanding of where the majority of the past price is through the volume profile and the point of control. And then you have the benefit of seeing where the gaps are in past price. So this deep gap in here, King, comes from this back here.
What about that gap? So I can't really see it very well because I haven't linked my.
I'm sorry, I'm just having a little troubles hearing you.
Oh, can you hear me? Sorry, is that better?
Nope, sounds like you're really far away.
Try again. Can you hear me now?
Yeah, a little bit better.
Sweet. So which time frame were you on earlier?
With the 1 hour.
1 hour, right. So if you zoom out a little bit, there was that gap there.
Back in here?
Yeah, that's right.
Yeah.
Yeah, so from what I've seen in the past, I know, like, if the market forms a gap, it likes to fill it. Would I be right in saying, if price, so where currently price is, what I'm seeing might be wrong, but it could be that because we're very close to the 200, I know we've rejected off it. However, I'm seeing from that bullish candle, it could be just a situation where it could, like, retrace back, so make like an M top for it to come back down to fill up that price gap, so that then it can continue
Yeah.
on a bullish run. Because I've seen that quite happen quite a lot. Like, it could. What time frame are we on? Is that the weekly?
No, this is an hourly that we're on right now.
Hourly.
That's all. Yeah.
Oh, sweet. Yeah. So yeah, when I've seen gaps like that, I've seen, like, the markets come down to fill those gaps. So, um, it's like, yep, it's pushing up, pushing up, pushing up, pushing up, pushing up for it to, later on. I don't know if there's any news announcements due soon or what, but something's gonna happen that's gonna make it could go down over a few days to that.
So all of what you just said is possible, right?
Mm.
But the how we get there, and the why we get there
Mm.
are kind of irrelevant, right? So on that 1 hour time frame, that gap was around 18.5. So in that neighborhood. There's the 18.5 level on the weekly.
We're looking at Nasdaq, aren't we?
NQ, yeah.
Thank you. Yeah.
Right.
But
So
1 hour time frame.
so this is why, again, why multiple time frame analysis is important.
Yeah.
Because you can learn a lot here. So you picked out a very small gap, and it is kind of a small gap on a 1 hour chart, right? But for whatever reason, it stuck out to you. Like you have a methodology in a process that works for you. So you identified that on the 1 hour. Why that's kind of important to me when I switch to the longer time frame is because when I find that price range, it actually cuts the bottom, so the tops of these candles, the bottoms in here, and the bottoms of these, right? Not perfectly, but close enough. And why that's important is because when I look at this thing on the weekly time frame, I know what I'm dealing with up here as far as resistance goes. I can either blow through it or not. But if I fail, it gives me another reason to believe, even though this was picked up on the 1 hour, I know this volume gap is here in this area of light trading. So I know if I fail and fall off this shelf, because that's basically what this is, if you fall off this shelf and into the gap, you'll find the bottom of the shelf and or the upper value range for the point of control. So although they're not to the penny the same, it's not pin the tail on the donkey, but it is an interesting level for me, right? And it kind of makes me wonder if my awareness should be on the shorter side, right? That's all.
Yeah. Because when I'm looking at it on the weekly, I'm seeing it on a resistance level. So price broke off the 20,000 level. Hit, was it 22,000? And then we had a sort of like a break of structure where we came off the 18,000.
Mm.
And then we've pulled back to, I say 20,
So,
20. So on the weekly, um, I can't even share my screen. But yeah, so we've on the weekly, on the 21 moving average, we're sort of converging between the 21 and the 50.
mm-hmm.
So for me, what I'm seeing is um like that could be an opportunity for a short trade just to that gap, because on the weekly, on the volume profile bar, it's showing like, right, there's a good entry point at 15,000.
Yeah, that's absolutely right. And the way you're going to know whether to where to enter is based off of a shorter time frame,
Yeah,
ultimately,
yeah.
right?
So utilize
So
a shorter time frame
yeah,
to capitalize on them.
so
So a trade like this, I possibly, yeah.
so this is I just did some quick fib on the that 1 hour chart,
Mm,
right? So what we said around 18.5 that gap sits in, right?
yeah,
There's the yellow line that I drew on the weekly.
yeah, between
Where's 618?
18.3 and 18.5.
618 is 18.7. So just another reason, and this is the process of analysis, right? There's a methodology and a structure about how you dissect a chart, right? It's not just sit down at your screen and start trading. It shouldn't be anyways, right? So you saw that gap on the 1 hour with the belief that price at some point in time might want to come back and visit it again, right? What I do is I take that level right away and I go to the weekly chart, the longer time frame, just to give myself an idea of where that is. Come back to your 1 hour and then draw some fibs. Fibs, fractals, and filters. Basis of how I trade. So what are the fibs telling me? Well, they're telling me 618's down at 18.7, that, this gappy range is down around 18.5, 18.6. We can argue about where we would draw the line. Doesn't really matter. It's very, very, very close. Now all I'm waiting for is the sign that perhaps the market will retrace and start to show me signs of when. I'm just going to take the fibs off because they're cluttered. And so you look for signs of when the market might be reversing or not reversing, right? It's just as important to know if the trend is intact than it is whether it's been broken. But we're going to look at the 4 hour, and the 4 hour is still bullish. At least for now. It's still bullish.
So would I be right to say that because I've set up a resistance line on 2800, because so from about 2800, price broke through that level, retested it, and then price. So you had like a bit of a wick out. It formed an M top at the 2200 level, 22,000 level, and then we broke through, taking out quite a lot of like these lower highs, and now we're pushing back up to that 2800 level. So if I was to use a fib on the daily, so from the swing high to the swing low of the daily, so from 2200 all the way up to 16300, I see we've just gone past the 618 level, and we're sort of hitting that previous double top that happened on the 25th to the 26th, so the Wednesday and the Thursday of March. So for me, this is just me. So I'd look for price to reject that line, but ultimately it's my resistance level.
I'm going to stop you for a sec. What do the fibs tell you? What's one of the things that Fibonacci's tell you? Retracement levels, right? Yeah. So don't get stuck in the thick of thin things, right? Don't worry about the wicks and all that. Like, keep the big picture in focus, right? Don't allow yourself to think too much, right? Because at one point in time, you're going to think so much, you're going to think yourself out of the trade.
Sure.
Your analysis is bang on.
Yeah.
Just do less of it, a little bit. So you're right about the fibs.
Yeah.
Okay? Like, here's your 618 area. There's the 200 MA. Is this so we broke it here, challenged it and failed here. Now we're testing again, right? Does the probability go up every time you test? Yeah, it does, that you might break through. But right now, we're getting the 200, a little bit of resistance at 618. 618s are usually the levels where the market retraces. It picks up the psychological pieces of us, the people that, the market participants, and it's usually where we get those instinctive retracement levels. That's the cool thing about fibs.
Do you know what? I forgot to add the moving average of the fib on that one, because I was just doing pure analysis just with the fib and the support resistance line. So when I throw in the moving average, so I like to add like extra confluence. But you're right though. Like, when the more you overthink it, the crazier it gets, because I just kept my moving average levels, seeing where we're at with the 200.
Yeah.
I'd put a stop order, stop I can't use the terminology. um, Short entry basically at uh 20 20,000, and my take profit, and then yeah, and then from there I put my take profit at this would be a big trade. This is
Mm-hmm.
on the daily though. On the 14,000 mark. I know that's overshooting.
No, it's just time, right? It's just whether or
Yeah,
not
it would
there's
take it
enough.
would definitely take time to play out
Exactly.
because it will
Yeah.
eventually hit it. Because applying the fib on the reversal side of it, sticking on the weekly, from the swing low to the swing high,
Mm-hmm.
my target is literally just below the 618 level.
Yeah. No, I hear you.
Yeah. So
Um,
analysis, like you said, is spot on. Oh yeah, and it also confirms that the volume profiler.
Absolutely. Yeah.
Yeah.
Um,
Love our sessions.
yeah. This,
Sorry.
that's okay. This is the US dollar. This is DXY, right? And this is one of the things. So when it comes to the major markets, what are the three things I look at all the time? US dollar, DXY, the 10-year treasury, and oil. Because those three things you can really get kind of a macro idea of what's going on and where the risks might be. But everything is technical, right? It's just a chart. Everything is just a chart. And this could be Bitcoin, it could be Ethereum, it could be FEG, it could be the Qs, it could be anything. The way price behaves, when we've seen these things so many times, doesn't change. We're trading above all three major moving averages, and when you do that, you try to have eyes in the back of your head, because eventually one of those moves, one of those downward moves will stick. So whatever time frame you're trading on, always remember that when you're above those three major moving averages, at some point, time and price will want to come together and tag those again. And the behavior of price when it does touch major moving averages for the first time, once breaking out of them, all that stuff rings true. So here's your move through the 20. Where do you find support? At the 20, and so on and so on. This is the first touch of the 50 since breaking out. And you got some prolonged support until you didn't. You broke everything right here. So just keep that in mind. When you're trading above all these things, sooner or later you're going to come back and tag them. But when you break down, right, it's a series of tests and failures. Right? This is why the trend is your friend right till the end. Right? Everything is a series of tests and failures. And lo and behold, we have, some two green candles that are giving us some buy signals. Where would price might want to go? Because current price revisits past price. So what can we identify as past price? Well, we can use those major moving averages as an example, because that's what they are, representations of time and price. Or we can look at our candle structure and look for levels, right? And quite often they align anyways, right? You'll notice that that's not by accident. So if I'm trading DXY, here's your obvious bottom. You get a little chattery, but you finally get a sell signal, or a buy signal rather, and that divergence starts to take off, and all of a sudden you start looking to the left in order to figure out where price may want to go to the upside. And what are we doing? I'm looking for little benches of past price, anything that I can use to help me establish where price might want to go. This is just a quick and dirty look. That might be one of them. It lines up relatively tight with the 50. There's no magic to it, right? Here's another one in here. See the tops of the T line? They kind of create that double top pattern. This is another level that I'd look for first. Current price revisits past. Again, it's not pin the tail on the donkey. We don't always get it to the penny, but it's pretty darn close. So where do you think the US dollar goes now? Now this is a good test, right? So you've had, the peaks and valleys here are obvious. But for now, and I'll be the first to admit that in this wave, I had the dollar going higher, right? I was in the camp that until the chart tells me that it wants to move the other way, at this point, up here has to be on your radar. Until it isn't. Right? And there's nothing wrong with having a trade invalidated or a thesis invalidated. What's wrong is when you don't listen to the telltale signs that your thesis has been invalidated. That's what's wrong. You're not going to be right forever. So we break, we get a signal, we come right back to the 20, bounce a little, we can't break the T line. This is the example that we talked about before. Is the divergence still there? Yep. If you were short and got scared out or stopped out on that weekly candle, the chart gods gave you another opportunity to short. We don't know what comes next. We have no way of knowing for certain what comes next. All we can do is try and increase the probabilities that we're on the right track and on the right side of the trade. That weekly candle, that green candle, is simply a green candle in a further downtrend. We knew it was a further downtrend, or we knew it was still intact because of that divergence. Remember what we said about the equal tops and bottoms? There you go. Then you go sideways. Back to where? The 5 EMA or the T line on this time frame. So now you've seen this a million times. Okay, we go sideways. This could be a 5-minute. The divergence is still intact. Then you can hit it again. Here we are today. Are you thinking that we're going to go on, break through here, maybe challenge the 200 and the 50? Or are we going to do this again? And then take out that low? Right? Because what happens is you arc over and then you take out the previous wave's low. Showed it a million times. So these are just 3 green soldiers, 3 weekly candles that have reached a level of acceptance, let's just say. I prefer to see price trading alongside of these levels. I don't like to see the big gaps. So as all it's done, so you had impulse down, it's just come back to an acceptable level for me. Are we going to blast through that level and test the T line? Are we going to get a giant candle? That would probably have to be like this in order to pull the 5 EMA up through the T line on the weekly to break trend. I don't know. I'm not feeling that. I'm more in the camp that this could arc upwards. Maybe you test the T line, you might wick it and then pull back, but then you end up doing what we said. You kind of do the arc. Oops. And if any of you guys see it differently, tell me, because that's why we do these things, so that we can have these conversations.
Yeah, because I'm seeing it as so I've done the inverted fib. So from 89 89,000 to 110,000, and that sort of just falls just a bit on the on the volume profiler. It's showing that red line with the gap in it.
Mm-hmm.
So I'm presuming that's what you use that as like an entry signal. I
Sometimes,
don't
yeah.
really. Yeah. All right. Cool. Cool. Because I've only got like little to like no knowledge on the volume profiler, so I'm still learning on that one. But I'm seeing it that the 103 level, because I know institutions like to operate on not like weird decimal points, but
Well,
like
you know what? I wouldn't make any of those assumptions. Don't worry about that stuff.
yeah. Let's forget
Just
about that part. But
yeah.
yeah, using
Here's
the
what you need to know right now. Are you trading below the T line and the 5 EMA?
yeah. Right now
Yes. Are you still
we're trading below
operating
the
under a sell signal?
200.
Yes.
Yeah.
These right now are just 3 green candles in a downtrend. Just like this giant ass red one
Mm.
was just a red candle in an uptrend, right? People
Yeah.
get too excited about individual little moves, right? The most important thing, at least for me, because I consider myself to be more of a trend trader, is being on the right side of things,
Mm.
right? This is the insurance. This stuff down here, this is the insurance that you pay to be correct, right? Don't have a buy signal on the weekly dollar yet. There you get it,
Oh no.
right?
Yeah.
And what you missed out on, or what you perceive you missed out on in this first candle, is simply insurance. This is the insurance down here. This is the insurance down here. This is the insurance down here. Right? The most important thing is that you're on the right side. For me, has always been to be on the right side of the trade as soon as possible. Once you're on the right side of the trade, your life is a lot easier. Are you going to be stressed about how to manage the trade if it's going the direction that you want? Yeah, probably. But it's a hell of a lot easier than managing it when you're on the wrong side of it.
Sure.
Right? That's what this has done for me. Keeps me on the right side of things. Now, it's great to be able to look at them in hindsight. But when we're trading, we're not working in hindsight. We're working in real time. Like, I can tell you, and it's kind of bizarre, right? This is my own system, and here I am trying to cheat it. Like, I can't tell you how many times I have gotten into that candle without the confirmation. And I think that 95% of the time I get kicked in the teeth. It's my own system. I try and cheat it and I get kicked in the teeth. So I wait to pay the insurance. Now this could be a 5-minute chart.
Great question.
Right? This could be a 5-minute chart. And it wouldn't matter. You would treat it the same.
To be honest, I don't really like operating on the 5-minute. I found that too noisy. So I'm more the sniper entry in the 15-minute between for great entry 15 and 1 hour. But yeah, I operate like analysis wise top down, weekly, daily, 4 hour entry on the 15 or the 1 hour, depending on which one gives me the best setup.
Yeah.
But 5-minute, way too crazy.
Yeah. No, totally. So this
For
is,
example,
again,
right now with
sorry, I was just going to say,
with
we're still on the dollar here. But just to
yeah,
give you an example of, this could be Bitcoin or ETH or FEG, it could be anything. The stuff below the 200, more inclined to be better short trades, because that's your basic bull bear indicator. Trades above the 200 typically are better longs, right? Because you're in a trend situation. And if you really want, well, then there's the Heikin-Ashis. Now, I don't typically trade Heikin-Ashis, but there is a methodology that you can use, and I'll share it with you right now. For those of you that haven't seen this before, it works real simple. Let's say we want to go long. I'm going to draw your attention to the right side of the chart, okay? Doesn't matter the time frame. Again, the shorter the time frame, the choppier they're going to get, but nevertheless, I'll switch to a 1 hour then. But, okay, let's start in the middle. Let's say we want to go short. Here's a red candle, right? A red Heikin-Ashi. Just so happens that it's above the 20, above the 50, and above the 200. 50, 20, 50, 200. So we know that on this 1 hour DXY, kind of trading above those three, sooner or later, we're going to fail the 20, and we're going to start to check them off. Current price will revisit past, break one level, find the next. But where do we enter? Right now, the Heikin-Ashis take the noise out of the candles. Right? It's because there's a look back on how they're calculated. But you don't enter on the first red candle that you see. What you're waiting for is your first red candle with no upper wick, there's a parabolic, that's that little dot above price. Parabolic SAR is parabolic stop and reverse. So when you see the parabolic stop and reverse above your first red candle with no upper wick, essentially that's your entry candle. And you stay in the trade. This is where you got to use your discretion. This candle would have taken some traders that use this methodology out just because it was a green one. But there you go. You base out at the 200 and then you switch out here. And so it helps you kind of stay in a trend. These dojis, when you see them in Heikin-Ashis, they're typically changes in direction or reversal candles. And the longer the time frame, the more true they'll be. Like this is a 4 hour, this is a very clean looking anyways, right? But it's just another way to trade, another way to track and trap price and monetize the chart, because that's our only job, right? Is simply to monetize the chart. And the chart will tell us, the market will tell us when we need to focus on certain directions. Right? We don't want to trade chop, prefer to trade the breakouts and the breakdowns. Those are the things we like. Now let's look at oil, because we look at this a lot and there's a lot of technical reasons to be watching it right now. So this is the daily chart of oil. We've talked about the breakdown to this 61.66 level, and it's obviously a true level because there's a concentration of price around it. Now we have basically 4 days of upward trending price. We're still operating under a sell signal with,
Sorry, quickly, Blunt.
sure,
What's the symbol for oil?
this is US oil. So if you put in US oil, it should come up.
On TradingView,
Mm-hmm.
we've got crude oil, oil
Yeah,
futures,
WTI crude oil, TVC.
WTI crude oil, TVC.
Yeah, that should
Cool.
give you the
Got it.
same feed.
Sweet. Cheers.
Right. So we're still working under a sell signal. We still have the divergence in the T line and the ADMA, which tells us that the trend is still intact. And even with 4 days of significantly upward trending price, because you took it from 55 up to 60, we still haven't broken into a new trend. We're still diverged. So these are just, until invalidated, these are green candles in an uptrend. And then you have to deal with the resistance of the 20. And this is somewhat structural in here if you look at it, right? Because it's some consolidation. It has to deal with that. And the question becomes, can it, will it, does it want to break through? Let's go to the weekly, because this is the one that's really important. This is the 500-day moving average on a weekly chart. You don't think it's relevant? Damn right it is. This week's candle, for as much exuberance and talk that it has given oil bulls, technically is just a green candle in a downtrend that's been unable to reach a respectable level of the 5 EMA on the weekly. This is a complete and total failure to me. Now, maybe it'll get saved by the next candle that'll start to push higher. But we can only look at what's in front of us right now. Right? Don't look forward, because you can't. You can't look past the right side of the chart. You have no idea what's there. It's a mystery. The only thing that we can do is increase the probability that we may have a better idea than the rest of the market. Right now, this candle is a green candle that was unable to bring itself back to a respectable level. And that respectable level is that 61-66 area. So when we look at the three choices we have, up, down, and sideways, well, the down, this is your next level, right? $51. And you look back to the left of your chart to find past price, that current price might be comfortable sitting down on and taking a rest. Right now, this is just a downtrend with a green candle in it. That's got to deal with a whole bunch of resistance on the way up. Right? This weekly chart, like, drew that level as soon as I could. Right? As soon as I can connect 2 points like that, I'll do it. Interesting. Not that I'm going to live my life by the trend line, but there's something to it, right? So this is still pretty weak for me. I'm not getting overly excited or going to pave my driveway tomorrow because I think the price of oil is going to skyrocket. I'm not there yet. So the chart says we're not there yet. Move down, retracement, can't crack the T line. big move down. That's where you first struck 61.66. But you close down here. Remember that, right? That's the close at the bottom of that big red candle. So that's a lot of pushing forward to only close down here. The response, sideways, basically back to the 5 EMA, and or look at it as you fail the 500 weekly. The following candle completely capitulates. And this one just doesn't have enough so far to get us back up there. So I'm more inclined to say this 51 level is a possibility than 65 or 67.
Yeah, I think you're right on that one. Because utilizing the fib on the weekly,
yeah,
from the low to the high, the 51 level is a strong support level.
yeah.
Got multiple touches right there. So I believe that, yeah, we're gonna come to that 51 level. I mean 50, between 49 to 50 level.
Mm-hmm.
So I'll put a little sort of rectangle between 45 and 51
Yep.
and
So
see how price reacts on that level. So yeah, I think that will be my key area I'm looking at, where I
so
want to see what price is gonna do at that level.
yeah. So now we have, this is the 10-year treasury. So we looked at oil, we've looked at the dollar, now we're going to look at the 10-year. These are, again, the three things that I'm looking at on a regular basis that helps me with a kind of a macro view. What I want to show you from a technical perspective is, this is a monthly chart of the 10-year treasury. So you have the 20 green, the 50 blue, the 200 red, the 500 is pink, and the 1,000 day moving average, and that's 1,000 on a monthly, right? So it's a heck of a lot more days than that, is amber. So some of you guys know a friend of mine, Joe G, that actually I met in FEG, and he used to come into our streams when we first started doing them, and you could tell that Joe was really catching on to what we were trying to do here, and measure price, try and predict where it might move in the future by where it's been in the past, right? And he's turned into a really good technician. He and I sat one day in our Telegram chat looking at basically this chart, except it was probably in around here. And the conversation was, holy smokes, could it be possible that the 10-year is going to go to 5%? No. Rates are like 2% right now. It's not going to go to 5%. That's insane. Current price looks for past. I don't care how long it's been since you've seen it, but current price looks for past. There you go, 5%. Why did we think it was going to go there? Because if you were to break one level and find the next, it was 5%. And, oh, by the way, it's already been there in the form of a double top back in 2006 and 2007.
So what's that symbol there? Blonde?
US 10Y.
US 10Y.
Right? And here we are today on the 10-year. $436. So just by understanding how price behaves at certain points in time, whether it be at a major moving average, a point of resistance, within the volume profile, you can with some reasonable certainty, get a good handle on where it's going. And to be able to stay on top of it, you need to know how to manage the trend that you're in. And that's what our script does. Like, there's more going on in the background than just these two levels, right? So it's the stochastic RSI stuff that's the secret sauce that helps us with producing fake signals and things like that. But if you can get in the trend, this is a monthly, it could have easily been a weekly or a daily. But look, you could just ride it up until the chart tells you not to. This is sideways. Like, the 5 EMA on the monthly levels up at 3 different occasions. Sideways trading. So in other words, the 10-year hasn't figured out exactly where it wants to go yet. And on the monthly, it almost looks like it's in purgatory. The draw for price to the downside would be the 50. The draw for price to the upside would be that 5% level where you find the 500 and 1,000 up in there too. Those are the draw for price. Break one level, find the next. And half the time, the things that we talk about sound bananas. Just a couple of guys talking about where the 10-year is going to go, and hey, they nail it. Anybody can do this, right? Anybody. It's Bitcoin. Hey, you guys might want to pay attention at 60 some odd thousand, 50,000, because if you roll over, you're probably going to find 30. No. You'll never see price that low again. Want to bet? Or back to oil, right? Telling people up here that you're going to see $70 before you see 100. No way, you're crazy. You can't predict price just with lines on a chart. Well, that's because you just think they're lines on a chart. That's why you can't do it. But guess what? Yeah, we did. Why? Because the chart told us that. Because it has rules. We know how it behaves. And under the situation where certain things would continue to happen, you're going to find your $61.66. So I hope you didn't buy too much $95 oil. But if you did, hopefully now you're in this room learning how to read price on a chart.
I saw a position on Euro USD. So I'm just waiting for a retest on it. So if you go on the weekly, so on the weekly we had that hit the high of 1.158. So overall we're currently in so we've finished doing the downtrend. We're now, so the way I'm saying it, we're now in an uptrend. We've made so we had obviously that swing low, got the high, lower high, equal high, lower low, but now we've got a higher high. So I'm seeing it pulling back right now to a price level, throwing the fib on 1.5. I'd say about 1.1, let's say 1.16. So from 1.018 to 1.16, the 618 line lands at 1.074. So this is on the weekly chart.
So your 618 sits at 107 on the weekly. right? That's
One
if it
point
plays out.
1.0729 is what I've got.
Yeah, 1.07.
Oh yeah, 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 yeah,
Okay,
yeah, yeah, yeah. Yeah, sorry,
so
sorry. We threw the numbers together. It just confused me a little
yeah,
bit.
no worries.
So,
So, but here's what I want. So the fact that you're going to use fibs is great, right? Because you have to be able to see what the retracement levels are. But
mm.
at this,
So that's what I was gonna ask you because it's already retouched that fit because we had that slight break, and then we retouched that 618.
Mhm.
So obviously we're still underneath the 200. So we're above the 200, the 50, and the 21. So it's looking like they're diverging at that point. So I
So let
mean,
me ask
obviously
you
we can't
this.
predict the
So when
future.
you look at this week, when you look at the chart that's on the screen,
Hmm.
where would the draw for price be?
So we want to be the
The
618 level. So
the,
1.07,
the draw for
1.073.
price, and I'm not even looking at the fibs right now. The
Mm,
draw for price is going to be the 20, the 50, and the 200 MAs on the weekly.
cool.
Okay, so just to simplify this, you get a little choppy on the weekly here. You get a buy signal, sell signal, but it's obvious that this starts to move higher,
Yeah,
right?
because it's a
So
strong bullish candle.
yeah, you just so you get your green candle, you find resistance at the 200 weekly, but notice that price. You know how I was complaining that the oil candle never reached up to the 5? In this case, the candles never came back to it. So it means it's bullish,
Yeah.
right? Finally come back to it. That's your entry again. Just like on the other chart where it was your opportunity to reshort, this is your opportunity to go long. So impulse up, resistance at the 200 you can expect, but the divergence is still there and you're going sideways. You're not falling down to it. That's more bullish than if it was to just come right back to it, although both would be acceptable. Right? When it doesn't come back to it and stays and goes sideways, it's typically more bullish. That's all how I look at it. This is the only stuff you need to know. Now, these three red candles are going to get support in here at the 500 MA, probably at the T line as a test. Right? So this could find support in here and then start to bounce again.
Mm.
Right? And if it does that, it's, we talk about how when it breaks down, it takes out the previous wave's low. If it was to move higher, it's going to look to take out the previous wave's high. So right now you're kind of measuring on the weekly anyways. Do you
Yeah.
get support here? Right? Like you can come back, price can come all the way back to the T line and then hold it and then take off again.
Yeah.
Like here. Right? So that's all you're going to wait to see. But you can't really think too much into it other than that. You have to know that these three moving averages are going to be a draw for price. These are levels where buyers and sellers have shaken hands in the past and they're converging on themselves. So that will be a draw. You're going to, okay, look.
Do you
So,
know what's funny? Because with this particular trade, I've been keeping an eye on it, and unfortunately, I've missed that drop down um due to just not being on my laptop, and
mm-hmm,
I don't like to trade on my phone. So yeah, so when I got home and I seen that it's broken past 1.12, so this is I'm now on the hourly.
yeah,
So it's like consolidating, and it sort of formed like a head and shoulders pattern.
mm-hmm.
And yeah, when I saw that, I was like, right. And then obviously with the fib and everything, I was like,
Yeah,
yep, this is definitely gonna go. It's looking like it's wanting to go back to that 618. So
yeah.
I know there's gonna be like touch
So,
point at the
so
38.
this is a way
And
that
then,
you can get another idea of how the market is expressing itself. So look at the stochastic RSI.
mm,
Okay, is it still bullish? Yes,
yeah,
but it's showing us that maybe it wants to roll over. This is the one that you get a clean move up, but this is
now we're
also
both
clean
on
as
the
well.
phone. Yeah.
And this, it doesn't change, it doesn't do that for no reason. Right? So this is probably going to soften a little bit. To where? We'll see. But I just know that this area down here is going to be a draw for price.
So my analysis was correct when I saw it.
Yep.
Yeah.
You're not going to get too many people that will yell at you and say you did something improperly if you're using fibs right. You know,
Yeah.
if you're using fibs properly, that 618 puts you right back in here with the 20, the 50, and the 200. And again, time and price have to come together. This is a weekly chart, so these three things may have actually converged on themselves by that point. But this is a draw. The 618 confirms it as that as well. Like, you know, catching the wick up here would be beautiful on a currency trade. So,
Yeah, that
right?
to be honest, like on my so currently I'm on a phase one 100K account, and I did catch the top of the wick. However, I moved my stop loss to trail, and I got stopped out in profit. But
Mm-hmm.
if I just let it ride,
Isn't the stop loss thing like the conversation that comes up time and time again? Like, you know, when and where and how do I set it? Which one do I
yeah,
use? So, you know, I've,
and I could have stuck to my rules, which
yeah,
is set it and let it ride. Get stopped. There's a reason you've got it
yeah.
there.
Um, I like to use a trailer if it's something that I'm going to be in for a long period of time and I can leave lots of room for, you know, the retracements that happen. To your point, if you run them too tight on a shorter time frame, 9 times out of 10, price will come back and stop you out. Um, and I had that happen to me a few times this week, and that's fine, right?
Yeah,
Um,
yeah,
but if you know, if you get in early, like this would have been a perfect example, right? Like get in early, get ahead of it, and whether you use a trailer or you're just going to move it up to lock in your profits as you go, still a winner. But the thing is, get in at the right time, right? Look how oversold the stochastic RSI is here, right? The big clean move on the Fisher as well. Like you could feel this coming. Stochastic RSI stayed overbought the whole way up, which you can expect because why? The buyers are in the room. They're not going anywhere. This is a real nice example of how our script works. Part of the reason I like to trade this thing too. Like this is a 4-hour chart, but it's pretty hard to get stopped out when you have the right entry. So, and this thing's up 30%. It's probably down 100 for the year, but it's up 30 today, so I don't know. What else do you guys want to look at? Solana, we always look at. You know, we have people that trade Solana, so we want to take a bit with that.
I'm looking at Nasdaq. Not Nasdaq. US 30 Dow Jones.
Mm-hmm. Just look at
Yeah.
the
Well,
major
to be
market.
fair, right now, I think if I'm so doing the top-down analysis, so weekly, we've got we've got an uh we had an M top pattern show at a pullback to the 200, and now it looks like we're just about to retest the neckline of the M top.
Mm-hmm.
Um, what
So
I found sometimes it overshoots the neckline just by a candle or so. However, we're in the when that conversion between the 50 and the
So here's what if I
21.
did this to you? What if I took the candles off? Now what are you gonna do?
Which one's the price? Ooh.
Now what
Oh.
are you gonna do?
Oh.
You're gonna make me crazy with the candlesticks and the wicks.
Sorry, bro.
so
Ah.
so
To
here's
be fair, I'll be looking to short because
I know,
removing the candles,
I know.
it's looking like everything is just about to just converge over and
Yeah,
pull back.
no, I know. So here's one of the problems that I had when for the first many years that I was doing this, was I would overanalyze everything.
Mm.
Right? I'm probably an overanalyzer, anyways. So then give me something to analyze, and it's just I can't help myself. Right? But I was able to recognize that I wasn't doing myself any favors. Right? Like I was trying to learn everything, and then the stuff that I did learn, I was forensic about it. Because hey, like someone who knew more than me was telling me that was what I should be doing, right? And to some extent that was true. But I got to the point where I realized that I wasn't effective, right? I wasn't as effective as I wanted to be. And why was that? Because I was overanalyzing my trades. So what you're looking at now is how I tend to take all of that stuff that I don't need to be analyzing out of my brain and out of my screen. And I'm just leaving the things that are relevant. Right? What
I
do I
like
need to
that.
know? I need to know the direction of the market. Right? So, if I'm not using any candles, the market tells me here to get in. So I get in. Still not using any candles. I don't know where the market's going tomorrow. Is all I need to know is the direction that it's been heading in, the one that I'm on. Are we still going that way? There's no sign telling me, or no stop that rings or bell that rings when it changes direction on us. The only thing I need to know is, am I on the right train, and is this train going in the right direction? Right? I don't want to analyze every little thing that I go by on the way to my destination. This stuff will drive you insane. Right? All I need to know is that A, the direction's going, or is it continuing to go in the direction that I want it to go, and what's in front of me. Right now, the 200 MA. That's what I got to deal with today. I'm not going to deal with the 50 today, or the 20 today, or the 500 today. Today, I got to deal with the 200.
And the 200 is telling me that price. I've removed the candles just like what you've done earlier, and obviously leaving the price um bar thing on. Everything is below the 200, and general rule of thumb is if you're
So
below the 200.
can I give you a little pro tip on what I do in these situations?
Yes, sir.
So as the T line and the 5 EMA break through on the way up, that's just telling me that directionally I'm okay. I'm not even concerned about, like, is the current candle hitting its head on the 50 or anything. I'm not. Right? It's just one of the things I'm doing to analyze this stuff is that, okay, candles give me a headache sometimes, but I need to know that I'm on the right side of the trade. I am on the right side of the trade. Price obviously moved through the 20 with some divergence. It moved through the 50 because the T-line and the 5 EMA did with some divergence in momentum. And here we are now.
So when
Right?
you say the T line, you're saying the 200 line or just a trend
The
line?
T-line is the 80 EMA.
ATMA. All right.
Okay. Why it's coined that, I have no idea. I think it was meant to be some sort of a trigger line or something, but it's the T-line. Right? So all I know is that price is trending higher. Sure, when I flip on my candles, I'm going to see that I'm hitting my head on the 200, but this chart still is expressing itself bullish. Yeah, a little double top there. Sure, I see that. I get it. I get it. But the chart is still expressing itself bullish until it tells us it's not. Like maybe this 200 is going to be the resistance that pulls us back, and we retest the 50 and the 20 like we just talked about. I don't know. All I know is that as we approach the 200 from up top here, it hit it a few times before it broke it. Can't it hit it a few times before it breaks it to the upside? Sure. But the divergence was intact on the way down, telling you the trend was too.
Yeah.
A little couple days of rest, and then the trend down continues.
And I've got to pull back up. But yeah. I think overall, well, I've got my alert set on 42,000. So if price, I'm gonna raise it just a little bit above that.
So here's your FEG daily chart. Right, and
I'm gonna set it at 43,000. Well, put a rectangle between 42 to 43,000.
so we've got our FEG token daily chart as well. This was just the Gate.io feed, I think. But look, same stuff. You get your buy signal. We looked at this last week. Really unclear where it's really going to go. But what did price do? It literally bounced between the 20 and the 50 before it took a big move up. And in fact, if we take our candles off, you'll notice that at no time until up here did you get a crosser to indicate a change. That's a nice move. But you have to have some sort of a mechanism to help you not just get in the trade, but determine, should I stay in it or not? Right? And I think that this mechanism and methodology helps with that a lot. Any time frame, any asset, any market keeps us
And
out
that
of
was
trouble.
the 5. Well, what moving average was those? Was that the 5 and the 8 you said? Or
Mm-hmm.
just moving average, yeah?
They're EMAs.
That's right. Exponential. EMA. Sorry about that, guys.
So again, we're coming. I just wanted to take a quick look to see how close we were to the upper value range here. So I think that's what it's been reaching for, right? That level. And now, someone in here was talking last week about. This is XRP, just another example, right? If someone was lucky enough to be in this, right, at 30 some odd or 50 cents, the question will be, oh my goodness, when do I sell? When do I sell? When do I sell? When the chart tells you to sell. But just most people don't understand when that is, right? But you guys do. If you didn't before, you do now. The chart represents what money's doing, not what people are saying. Someone last week was saying that they thought Aave was going to move. Oh, here we go. It certainly has. It's a 10% move just today alone. And, you know, the bulk of it really came 140.25 right off the 20. It just exploded.
Sorry, Blunt. On TradingView, I'm trying to find so I'm tapping in EMA. I've got quite a ridiculous amount of options there.
Yeah, you just go into indicators.
Yep.
And in the search bar, just type exponential, and it'll probably show up. Or you can just subscribe to the script, and the script has it built in with the signals and everything.
Right. Can't do the scripture until the end of the month. But that's all right. All right, cool. I'll get the script at the end of the month.
Yeah, it'll help a lot.
Yeah.
You know, we were looking at this, I think, on Tuesday. We'll take one more quick look at it.
Yeah, we were.
You know, I think a lot of us were trading this up to this point, and I was actually getting discouraged because I thought I was going to miss the rollover, but I actually caught most of it, and I caught some more of it yesterday too. So, but it's still not done. Just to give you an example, it is still not done. And how do we know that it's not done? We know that it's not done because at no point in time have we broken our trend, right? Like, look how clean this is. I know you guys can do this, right? Remember I tell you to try and trade the larger time frames, the longer time frames like the 4 hour, the hour, and try and get a trade that'll run a little bit. This is why. I would rather see you get a good entry up here on a 4 hour chart that capitulates than get chopped up on a 1 or 5 minute chart where you don't have any flexible recovery time or anything like that. Like super clean. So, anyways, any more questions for today? Anyone?
I got a question, Blunt.
Go for it.
So my question is, talking about longs and shorts, where would you like more or less put like a stop loss? Would you use like the previous candle? So you don't get wicked out?
On which time frame? Any time? Like any particular?
Yeah, like a 4 hour,
okay,
let's say. So you don't get wicked out.
Yeah. There are going to be times that you do get wicked out, right? Like there's just, even your trailer might get wicked out. Like you're probably referring to a candle like this or a candle like that, right? There's sometimes nothing that you can do about it. What I'm typically doing, like when I trade stuff like this, and I trade it with any leverage, I'm probably looking at a shorter time frame to enter off of, right? Like I'll even drop this down just for interest's sake here. I try and put my stop in, so if I was to enter here, let's say I would enter on this candle, my stop would be somewhere down here. I try and, part of the reason I drop my time frames down is because I want to get a good entry. So if I think I have a good handle on where the trend is going, I get a good entry like this, but I'll put my stop right at even or just under until I go green, and then because I don't like to lose money, right? I'd rather get stopped out a little bit green and re-enter then get stopped out down here, right? So I work hard to make sure I get a good entry. I tuck a stop in as quickly as I can. If it's a trailer, it'll be like 0.5% to 1%, like nothing more than that. If it's not a trailer and it's fixed, again, I keep it really tight. And then as I start to get in profit, the trailer's either going to move up with it, or I manually move up my fixed. But there is nothing that you can do to really protect yourself from that crazy wick. You know, there's just not. But as a good example, let's say you got stopped out on this wick. Well, because your divergence is still intact on the trend, just get in again. Right? It's pretty safe to re-enter when you're trading on the north side of these levels as a trend. Right? Where people have issues is that they're probably not aware that they're even in a trend move, right? Or what the trend is, or where exactly are they buying and selling. Like, how many times have you heard someone say, oh, you know, price was going up, everything, you know, and I got in, and then every time I buy, price sinks. Like, if you want a short, just do it when I'm buying. That, you've heard the joke, right? Well, maybe you're buying up here, unaware that the chart is going to roll over and take out the previous wave's low. Maybe that's you buying up here, thinking that price only goes up. Maybe price does go up. But if you don't understand how to read price on a chart, you're never going to know. Maybe this was that same person buying here. Oh, price went straight down. Oops, going to come back again. Oh, no, it's not. We've all been there. You have to know, if you're going to do this, you have to know how to read price on a chart. You have to understand whether you're buying at support or are you buying at, you know, resistance. Are you in a trend move up? Like, I can't tell you how many times I've had people, oh, I know, I'll show you a chart. Don't laugh out loud. Here we go. I have had people tell me, like, back here, absolutely confused on why they could not make money on this stock long. And it actually started with, you know, I'm having some problems. I can't seem to get any momentum, and you know, every trade I make, I'm either getting stopped out in or thing completely reverses on me. I'm like, okay, so what are you trading? Oh, canopy growth. All right, so what's the problem? You're short? No, I'm long. Well, that's the problem. Seriously? Did you not look at the weekly chart or the daily chart? This is not a joke, it's a true story. You wonder why you can't make money trying to long this stock like this. And that money that you did make on its way up is now all gone. Who does this? Who longs this stock like this? That should be some sort of clinical disease. This chart's not. This chart. Hey, but you know what? You know the sad part is, there's institutions that are doing just that, pumping money into crap like this. That has, technicals aside, this company has no path to profitability. Never did, never will. It's all narrative. It is all narrative, right? This is the stuff that was all talk, where you had little old ladies going out buying weed stocks because their grandsons and daughters told them to, because it was going to be huge. And for 5 minutes it was. But the chart told you when the gig was up. Like, it just does. This thing didn't give you that's August 22 from March. That's a long time before it spit out any sort of positive signal, and that was just consolidative, right? Like, this thing's going nowhere. And yet somebody's asking me my opinion on why they can't long it. Well, this is why. True story, right? Like, it's just doesn't make sense. Because if you don't have the knowledge or the understanding of how to read price on a chart, what are you doing? Right? This is the monthly chart. That's it.
You shouldn't be trading in the first place.
No.
I think this is where,
especially with retirement account money. Like, there's people that are trading retirement accounts with absolutely no formal anything on how to read price on a chart. But I can guarantee you one thing. They've probably got 3x spaces going at one time. They've got Bloomberg and CNBC going on at one time. And they wonder why they can't get a handle on anything. Right? That is the noise in the market. Right? That's the noise in the market.
there's literally a friend of mine, I think I mentioned him before, who he's heavily into his poker. And I used to actually live with him, sorry. And he see me when I got serious into trading and learning technical analysis, so a couple of years ago. He's still questioning why I don't listen to news or follow news for my trading decisions. And I keep telling him, news is built to create fear and greed, but the charts is neutral. The charts don't lie.
Right.
And a lot of people trade off, because I think I had it somewhere like this statistic of, like, that like 90% of traders lose 90% of their account within the first 90 days. Majority of those don't know how to read price on the chart. They
And
just
98% of them continue to trade.
yeah.
So that's
It's
why
crazy.
that's why the prop account people have
They love them.
have infinite customers.
Oh, they love them.
Right?
I mean, prop accounts
Just
are
want to say,
double-edged.
Blunt, thank you for that script, man. It did pay for itself in one day.
That's awesome. That's awesome.
Oh yeah, so thank you for that,
Dude,
man.
you're getting to be really good at doing what you're told, eh?
Yo, I'm very open to learning. So when people tell me something that I don't know how to do, but they know how to do it, I try to do exactly what they've taught me. So
You're going to pick up the phone and say, Mom, tell me to do something. I promise I'll do it. Anything. Doesn't matter what it is. I'm really good at this now. Right?
hopefully, I could become a pro, man, like you.
No, listen, we just do what we're told, right? There's no extra points for front running the chart. That's not why the chart's there. Right? It's just a real-time representation of what money is doing, not what people are saying. That's what's important.
Absolutely.
Whether we think it's warranted or not, regardless of our point of view, our bias, our thesis, the chart was telling you that the trend for the S&P has been consistently higher, right? Now we get a little into some choppiness now, sure, but we all know why that is. But the chart doesn't lie, right? This is what happens when you have, so markets don't like chaos, and they don't like indecision, and they do like clarity, right? None of those things it has right now. These types of moves like this, that's when a market has clarity, regardless of whether that clarity is provided by Fed support or not. The point is that this is what a market without chaos looks like. This is a market of chaos. So our technicals, like what will happen as we have these drastic ups and downs, it spreads out your ranges and all of your averages over time, right? So this will get really cute as it unfolds a little bit more. You're gonna have these big swings, but ultimately those big swings will still be technically true. Like here's this massive pullback and then basically a snapback right to the 50, right? Is it normal to have moves down and then snapbacks up? Sure, but these ones are just super intense. And this is the volatility that everybody talked about at the beginning of the year. What to expect? Well, volatility. Well, this is what it looks like. And there's probably a lot of people saying, "Man, I don't really like it now." So, right. It's hard to plan a portfolio in this stuff. NVIDIA doesn't look any different than the S&P did or any of those other charts. Big pullback, snapback, we know what the resistance is, but we're still working under a sell signal. Like we haven't had it confirmed to move higher yet. Same with Tesla. And these are weeklies, and I'm showing you the weeklies because a lot of the noise is taken out of it. Still working under the original sell signal, don't have a buy signal yet. Now, why, remember we talked about the insurance? So this is an example on a weekly chart. Could you buy here? Would it be a slightly tradable moment? Maybe. On a short term? Sure. But on a weekly chart, if you just decided to buy in here, not wait to pay the insurance, and then all of a sudden it rolls over and comes and takes off this the previous wave's low, that's not as comfortable an experience. And that's why we wait. This is a 20-day moving average on a weekly chart that looks like it wants to come down and pound this thing on the head, so we'll see what happens. But there's a lot of green today, it seems. You guys got any other questions for today, or are we almost good to go?
Just a quick one with your script. So I'm just on your. I went to Google and it's blunthouseta.com, isn't it?
Correct. Yeah.
And for the script, it's the Blunthouse TA long short indicator script. Is that the one I'm looking at?
Yeah, correct.
Cool.
And
so if I want access to that, do I just need to email, or do I just hit you up on Telegram?
Yeah, it's actually a really good question because it's a little clunky the way that we do it. But I have to do it on TradingView. So just follow me on TradingView, and I'll of course follow you back. Just send me a quick note that you'd like to try the script. And this would
hang on, I'm on TradingView right now.
Yeah. Just send me a quick note that you want to try the script, and then you follow the steps that you just talked about on the website.
How do I follow you on TradingView? Where do I need to click on?
Just follow, I think I'm Blunhouse TA, I believe.
On the actual trading view to follow people.
Yeah.
So how do you do that? Because I've actually haven't done that before.
You can go to.
Is it chat or?
You could go to the chats. You could go in there and send me a message there.
Right. Send a private message. What's your user?
Yep.
Blonde. Oh, Blondehouse TA.
Yeah, there you go.
Cool. So I put hi, it's Mike. Oh, hi, it's Magic.
Yep. And then what I'll do is once we get offline, I'll respond back. You go through the process on the website, and then as soon as that all clears, then I just grant you access, and it gets loaded into your indicators.
Okay.
And when you go to load it, you might find it. So when you click on the indicator tab at the top of your screen, and you get the pop-up window, it will probably be in your invite only section.
Cool. Okay, yeah, no worries. I'll wait for you to once we finish this. Yeah, you just hit me up on TradingView, and then yeah, I'll follow the steps.
Yeah, perfect. All right, guys.
Good session, man.
Yeah, well, listen,
I'm happy.
I
I got no
appreciate.
questions, man.
Well, I want to say thanks to King Koopa for helping us get figuring out how to do this over Telegram, and then streaming it to X and YouTube, because I much prefer having you guys in the room to chat with than talk to myself. So.
Yeah, I joined the YouTube today, man. And I heard King Koopa ask a question. I'm like, hold up, how do you ask a question? So I jumped in the TG and I was like, oh, all right.
You thought you were in the Matrix for a while.
For real, I was like, what's going on? What kind of new feature is this?
Yeah, about to say YouTube's got a new update. But no, I like this, and I appreciate Blunt hopping on, and you're the one that had to go through all that stuff to figure it out. But yeah, no, this is great. I think it's always nice for us to come on and talk and chat and communicate real time.
I said to my wife, I said, I wish we had a teenager around here, because I could really use tech help. Anyways, guys, we'll catch up on, I guess it's Tuesday, and if there's anything else you guys need to talk about, you can hit me up anytime you want. So.
Oh, just very quickly before you go. Right, I'm just seeing this on my Euro USD trade. So obviously we've got that on the 4-hour chart. We've seen that bearish candle.
Mm-hmm.
Now, because I've seen this pattern quite a few times, and I've started to mark it out. So you get like a bearish candle, then a bullish candle, and then a bearish engulfing sort of like breakout candle. And now we just wait for a retest of that one. So we want it to be no more than 50% of that last bearish candle for it to be an entry to go down.
Well, I think that
because it's sort of like hitting, so it's turned support into resistance.
Sure. So here's what we were doing, right? We're going to follow this chart. So if this is something that you trade all the time, you're going to be all over this daily chart and hourly and 4-hour this thing. There's no question about that. But on the daily, you're going to see that you get a signal, right? And you just simply, like, the rationalization part is all I'm focused on is my trend still good? Am I on the right side of this thing? And where's my resistance?
I think the trend is still good.
So here's the US, on this particular move, what did you wick? That's the upper value range of the point of control for the market profile. See?
Oh, I never put that in.
You see? So you wicked it and pulled back. Look how overbought you were when you wicked it. Look at your Fisher transform when you wicked it. This, right, was a sell signal. this is the few days of insurance that you're paying to make sure the market's got itself sorted out, and there's your signal, right? And where are you short to? Look at this gap, right? So you knew that if you broke this level, you fall off the shelf into a volume gap, price can fall quickly. Where is it going to fall to? Chances are the 50-day moving average. Break one level, find the next.
That's right.
Right? And here you've got the point of control on this big gap, or big shelf rather, which is also a draw for price. So this is
I think this is a solid like short trade for a good.
Okay, perfect. Look at this.
Well,
this is your 4-hour chart. Love this. So here's your 50. So you're getting all kinds of resistance here at the 50, right? And you fail it.
Yeah.
So you fail the 50. Why is my 50 ice blue? Because if you fall through the ice, it's an ice hole failure. That's David Elliott's term, right? You fall through the ice, you got a problem, right? Back here, you fell through the ice, right? So now the 50-day moving average is now your resistance. And look, you can't get above the ice. You can't get above the ice. Price fails.
No, you can't.
See? So, every time you go back and you test and fail and test and fail and test and fail, you just increase the probability of a capitulation or a larger move down, right? These candles here on the left, you don't even need the volume gap to know what you're into. Look. These big candles are filled with fairy dust and air. That's it. It's great when you're on the right side of them when they're going up, I get it. But we have to mitigate risk, right? So we know that these candles are filled with fairy dust and air, and when price comes back to revisit them, it can drop through them quite quickly. That's how the gap was created in the first place.
Yeah.
Okay? So just follow the chart. Just follow the chart. Don't have to front run it. Just wait for your signal. Let the market come to you.
Yeah, that's what I'm gonna do.
Yeah.
I'm gonna wait for this to just pull back up a little bit to the 1.125 level.
Yeah.
Stop loss gonna be set 1.138, and take profit is 1.105. And
this will absolutely, and this what you're recognizing is that the volume gap gives you an opportunity to set some targets, right? So if you're falling off a volume shelf, or in this case the point of control, and you fall into the gap, it only makes sense that maybe you'll catch a chair on the lower bench, right? The lower shelf of the gap where you can sit down. So anyways, we'll catch up on Tuesday of next week, and have a good weekend. You guys know that if you have any questions, you can always reach out anytime.
Yes.
And I'm gonna have a special guest, by the way, coming up next week, I believe. Should I tell you now, or should I wait?
You can tell us. I mean,
okay, so you remember, was it last week or the week before, I told you or asked you if you could follow David Nikoski on X, that it would be well worth your while. And David has agreed to come in as a guest. I'm thinking maybe next week, to kind of share his world of technical analysis. And this guy is a pro, right? He is a real pro, just like Carpathia is a pro.
I just spell his last name, David
Nikoski. I think is it Dave Vermilion King or something like that on Twitter, but his name is David Nikoski.
That's it.
And he's going to come in. David's a very good technician, like an excellent technician. He focuses on relative strength, and he's going to be able to talk to you about relative strength in a way that you've probably never heard it before. And what David focuses on is, so for example, if you want to buy a banking stock and you've got XYZ bank that you think you want to buy because it's been returning what looks like pretty strong. David looks at the whole sector, and based on relative strength, he'll identify the strongest banks out of that category. So that what you're doing is you're actually going to be trading or buying the stocks that have the best probability of moving higher and staying higher, as opposed to picking one that you think might do well. Right? He looks at the market in a very different way, and it's proprietary what he uses. So, but I think you guys will find him very interesting, and I'll confirm next week whether it's going to be Tuesday or Thursday. Cool. And I'd like to get Ken back in here too, Carpathia.
I'm looking forward to it.
Yeah.
Yes, sir.
Right. So sorry for the real world live stuff that goes on, but it is what it is.
Yeah, we're good now. I think we've got it under control.
Yeah.
I guess we'll find out Tuesday.
Exactly. All right, guys.
Well,
Thanks for stopping by, and I'm glad we're back in Telegram doing this. It's much more comfortable for me, so that's for sure.
We love it, man.
All right.
We love it.
Right, cheers,
Well,
guys.
I'm loving it so far.
Appreciate you, Blunt House.
You too, guys. Have a great weekend, everybody. Bye-bye.
You too, man.
Hey, King, we got to chop it up.